I'd like to ask you opinions or what does Paul think about these things related to the conference, starting with the California wildfires. One thing that's noted around that event are all these regulations to keep insurance affordable in the state of California, and that's often cited as one of the big problems.
Well, I mean, obviously, everybody wants insurance to be affordable and for people to have it. But the fact is, when the risks, when the uncertainties rise, and an insurance company's potential costs in a future disaster when they arise, then they need to price the insurance commensurately to cover themselves. Otherwise, they're going to be bankrupted. So if you artificially hold down the price of insurance, then duly you're going to experience what's actually happened. A lot of insurers leave the market completely, which leaves in the end with the government being the insurer of last resort, taxpayers being the insurers of last resort. Governments, politicians can't get around the underlying economics of these things because of things like climate change. They are much more risky environments than was perceived, historically.
Previously, we've talked about all these incentives in place to grow home ownership and zoning regulations put in place to keep property values inflated artificially.
Home ownership for many years has been seen as socially a good thing. People who have a stake in their community are more likely to be good citizens. They're more likely to want to be careful of the environment in which they live. It was also a good investment for them. And people were encouraged through the taxation policy, which is very favorable towards residential real estate investment. In the Communities Reinvestment Act of the 1970s, US politicians put in place to encourage home ownership amongst poorer sections of society. All of that was well intentioned. It was a good idea. It was well intended. But once people have owned their house, of course they want to protect its value, and they start to want to have zoning regulations to stop other people building near them, which is going to reduce the value of their house. Now, the sort of zoning regulations and restrictions on building, the United States just has not built enough houses to support its growing population. The United States isn't alone in this. The United Kingdom is probably even worse, but you had housing booms of house prices in Canada and Australia and other countries. It's not purely a US thing. House prices have become unaffordable, especially in the major urban centers, cities like New York and San Francisco and Los Angeles and so on. It's almost unaffordable for young people to be able to buy a home and raise a family. And that's because we just haven't built enough houses. We haven't built enough houses because of zoning regulations and restrictions, and people wanting to protect the value of that which they already have rather than extend the value to other people. The road to hell is paved with good intentions.
Yeah.
That nature of these kind of adaptive processes, what starts out as a good idea, as a good well-intentioned policy, morphs over time as people adapt to that policy and try to take advantage of it.
And another thing that we were talking about in a previous conversation is this concept of asset-based investing and how that's such a strong pull for people to put their money in. It's a conservative place to put your money in, but then that ties up capital for other things like investment in innovations. Can you talk about that?
I mean, a house or buying a house, there's two separate things you need to separate out. One is it's a place to live. Everybody needs shelter. Everybody needs a place to live, and that's what the house is. But then there's also the land that the house is sitting on. The house itself is a depreciating asset because wood rots and stuff decays, and every year you need to spend money on having your air conditioning tuned up and your heating, your boiler cleaned and all the rest of it. So the house itself and the components in the house are depreciating. They lose value over time. You need to continually reinvest. The land on which the house sits is a separate thing. And when people talk about house price appreciation, really what they're talking about is appreciation in the value of the land. And that's what the zoning regulations and so on restrict. Is the value of they artificially increase the value of land by creating artificial constraints on what you can do with that land and what neighbors can do with it. But the land itself is it's an asset, it's an investment, but it doesn't actually pay dividends. It doesn't produce any cash flows other than the cash flows you get from actually using it for something. So it's a bit like cryptocurrencies, for example, or gold. These are considered by assets as assets by many people, but I view them as zero-sum assets. If I buy a cryptocurrency from you and the price of cryptocurrency goes up, then I've made money, but I've made money at your expense, because you've not made the money that you would otherwise have made had you held on to it. So when we trade these assets amongst ourselves, one person's profit comes at the expense of something else. These are zero-sum assets, and in that sense, they don't add any value to society at all. Unlike investing in a real business. If you invest in a real business, then that can innovate, that can create new things with new infrastructure, new products, new services, and can add value. So investing in a business can create cash flows, which will both service the debt or the equity that was put into to start the business in the first place. That can actually create something. It's not a zero-sum asset. It's a positive-sum asset because it can create new value in the way that zero-sum assets cannot. So in my opinion, government should encourage people to invest in these positive-sum assets, like invest in a business. They shouldn't encourage people to invest in zero-sum assets like gold or cryptocurrencies, or frankly in houses.
Yeah, are the incentives structured in that way, or are they the opposite of how you would structure them?
There are certainly big tax advantages in favor of real estate investing, which are not available to stock market investments. And of course, all of this capital which is tied up in countries like the UK, there's a huge amount of money tied up in housing. The country has not built enough houses for years because of all these equivalent of the UK equivalent of zoning regulation talked about in the US. So house prices in the UK are extremely high. And I mean, it used to be so that an Englishman's home is his castle. Well, now it's more like it's his broom closet. It's houses in the UK are so much smaller than they are in the United States. All of this money which is tied up in real estate investment is money which is not available to invest in new infrastructure, or invest in new businesses, or invest in the other innovations which will increase productivity. And in the end, the only way we can increase incomes for everybody is through productivity increases. And those productivity increases come through investments in things like education, and investments in businesses, things that can create new things, as opposed to passive handing, trading a house between ourselves, or trading gold between ourselves, or trading cryptocurrency between ourselves. Those zero-sum assets, none of those things can create any value at all. So it's just a case of taking one person makes money at the expense of somebody else. Government should not be encouraging that kind of activity. There should be, to the extent that government should be nudging behavior at all, they should be discouraging that kind of passive investments in pre-existing assets, and they should be encouraging investments in businesses and risk-taking assets. Of course, it doesn't mean to say that all businesses are going to be successful. I mean, the vast majority of businesses fail within the first few years. Business is hard, but that's what government should be encouraging people to do, and encouraging people to invest in businesses and in their education, because that's what increases the size of the economic pie. That increases value for everybody, rather than simply taking the same pie and trying to divide it up in different ways.